Hello students, welcome to Mr. TK classes. Today we are doing cash budget and we are doing question 2 from Intake College November 2019 question paper. The question reads, Mr. Mentini has identified a gap in the market for providing recording devices. He has done a market survey and has found the sales potential to be promising. He has 200,000 to invest in a business, but he is concerned that he may need more cash, in which case he will have to apply for a bank overdraft. He asked you to assist him with the preparation of a cash budget for the first 2 months of trading. He has provided you with the following expected figures, and the expected figures are as follows: sales, purchases, fixed expenses, bad debts, and these are the figures for March and April. Remember, the business is starting to trade in March. Okay, then we have additional information 1, 2 up to 8. Then our required draft a cash budget in columnar format for March and April 2019 question marks. So we are going to do our cash budget. So remember, our cash budget starts with cash receipts. Our cash budget starts with cash receipts. Okay, so under cash receipts we are going to record all the cash that we expect to receive in March and that we also expect to receive in April. So looking at our information, we can already see that we have sales here. So if we sell, it means we expect to receive some cash. Alright, and before we go there, I can see here they are saying he has 200,000 to invest in a business, but he is concerned that he may need more cash. So if he has 200,000 to invest in a business, what does that mean? That means that is capital, and the business bank account is gonna increase the capital. But here they didn't say anything about when this capital is going to be injected. But before we even check the additional information, we are assured that the capital is going to be injected in March, because that's when we are starting the business. But we'll leave it blank. We'll see if there is nothing in the adjustments. We are going to assume that the capital is going to be injected in March, because that's when the business is going to start. Okay, then let us look at our additional information. All sales are on credit and cash is expected to be collected as follows. What does this mean? It means that we don't have cash sales, but we are going to have receipts from debtors, because the sales are on credit and the cash is expected to be received as follows. So it means we are going to have, it means okay, it means that we are going to have receipts from debtors. So our receipts from debtors, let us come here in the working papers. Then we do our receipts from debtors collection from debtors collection schedule. So in the debtors collection schedule, we are going to have March and April. March and April. Okay, so March and April, we are going to write our credit sales here. So here they said all sales are on credit, which means that for March, our credit sales, they are going to be 220,000. Then April, 245,000. For April. Okay, then we don't have May, so we are going to remove this. Okay, then now they are saying 50% all sales are on credit and cash is expected to be collected as follows: 50% in the same month of sales. So if we sell in March, 50% of the cash you are going to receive it in March, because they are saying 50% in the same month of sales. So what is 50% of March? 50% of March that we are going to receive in March, we are going to say 220,000 multiplied by 50%. Okay, we are going to receive 110,000 in March. We are going to receive 110,000 in March because they said 50% in the month of sales. So if we sell in March, we are going to receive 110,000 in March. Okay, using the same instruction of 50%, let us look at April. So April we are going to sell for 245,000, which means that 50% is going to be received in April in the same month of sales, which is 122,500 because 50% is received in the month of sale. So if we sell in April, we are going to receive 50% in April. Okay, then let us go to the next instruction, which says 40% first month after the month of sale. So if we sell in March, we are going to receive 40% in April. If we sell in March, we are going to receive 40% in April because they are saying we are receiving 40% in the following month. So we are going to say 220,000 multiplied by 40%. Okay, 88,000 is going to be received in April. If we sell in March, we are going to receive in April. Okay, 88,000. This is the first month after the sale. Then April, if we sell in April, we are going to receive in May, of which we don't have May budget, so we are just gonna ignore that. Then here let us add. If we add, this is going to be 110,000 because it's just one amount there. Then let us add April. 88,000 is already on our calculator, so we are just going to say plus 122,500. We are going to get 210,500. 210,500. Okay, then this is our collections from debtors, or this is our receipts from debtors. So in March we are going to record 110,000. Then in April we are going to record 210,500. 210,500. That's what we are going to record in April. Okay, then we move on to the next adjustment. Which is additional information number 2. Okay, purchases are paid for in the month the expenses incurred. Alright, so now these are cash payments, right? Let us just come here and write cash payments. So our cash payments, they include this. Purchases are paid for in the month the expenses incurred. So we are going to pay for this cash purchases. Okay, so our cash purchases, they are just saying here everything is cash purchases because that very same month they are going to pay for what we have bought. So we are going to say purchases 115,000, then 123,000. So we are done with information 2. Information 3, fixed expenses include rent, wages, water and electricity. So when you are given an adjustment like this, you have to check if there is something that is a non-cash item. What do we mean when we say something is a non-cash item? It means we are not receiving cash, we are not paying, right? It's just an expense. Let's say we can give an example of depreciation. It's just an expense. We don't pay cash in respect to depreciation. So here these are all cash items, these ones, and they are quite of when are we expecting to pay this, which means we are going to pay in the months which we are going to incur them. So we are going to write expenses fixed expenses. So our fixed expenses 35,000, 35,000, 35,000, 35,000. Okay, then we move on to the next one. Just on wishes to withdraw 13,500 per month from the business for his personal use. So if someone is withdrawing money from the business for personal use, that is called drawings. That is called drawings, and it reduces the bank account. Since it reduces the bank account, it is gonna be a cash payment. So our drawings said Jason wishes to withdraw 13,500 per month. So we are going to have 13,500 and 13,500. Then we move on to the next one. Advertising will cost 8,500 in the first month. Our first month is March. Advertising, remember we pay, this is an expense. Advertising is an expense, so we pay. Advertising, we pay. Okay, advertising will cost 8,500 in the first month, and thereafter be 5% of sales payable in the month the expense is incurred. So we are going to pay this expense in the month it has incurred, right? So 8,500 for March we are going to pay in March. Then April, they said we'll calculate it this way. We are going to say for April 5% of sales. So April sales 245,000. 245,000 multiplied by 5 out of 100. We are going to get 12,250. 12,250. Then what is the next expense, or what is the next adjustment? Okay, we can see that we have number 6 here. Commission of 2% on sales is paid in the month in which it is incurred. Alright, it's commission on sales, which means it is the company paying. It's not the company receiving this commission, because it is commission on sales and the company is the one paying. And they said in the month which is incurred, commission is only paid where sales exceed 225,000. Right, so that's another thing that we have to look at. So in March, did they exceed 225,000? No. In April, did they exceed 225,000? Yes. Okay, so in March we are not gonna pay, we are going to pay in April, because that's what the adjustment says. Commission of 2% on sales is paid in the month in which it is incurred. Commission is only paid where sales exceed 225,000. So commission is 2%. So we are going to say 2 out of 100 multiplied by 2 out of 100 multiplied by 245,000. We are going to get 4,900. 4,900. Okay, then we move on to the next one. Mr. Mentini will deposit his capital contribution into the business bank account when the business commences trading in March. Remember that capital that we're talking about. Remember that capital that we're talking about. It is gonna be deposited in March when you start trading. Okay, the capital is 200,000. So we are going to say 200,000. We are going to say 200,000. Okay, we are going to say 200,000. Alright, here we are just gonna put a 0. Then what is the next adjustment? He plans to purchase special equipment costing 95,000 in April. So this is gonna be purchased in April. So we are gonna pay in April, and is purchase of equipment. Purchase of equipment. Purchase of equipment. Purchase of equipment, 95,000. Right, let us see if we have any adjustment that we left out. This one, number 1, we've done it. The one for purchases, we've done it. Fixed expenses, drawings, advertising, commission, capital, purchase of equipment, and here sales, purchases, fixed expenses. All right, then bad debts is a non-cash item because remember you have debtors and you have sold on credit. So when you sell on credit, you're expecting to receive cash. When you're expecting to receive cash, now you're saying I'm no longer expecting this cash. It means you are no longer expecting to receive that cash. So bad debts we are writing off. There is no movement of cash there. It's a non-cash item. Okay. Then it looks like we are done here. We just need to do our totals. All right. So we are just going to write total receipts here. Total receipts, total receipts, and total payments. Total payments, total receipts, and total payments. So, looking at our total payments, total receipts. Okay, let me just put this. Okay, let me just put this. Total receipts, total payments, total receipts, total payments. Okay, then here we are going to have 210,500, 210,500. Here we are going to have, let us add on our calculator just to make sure of our amounts. 200,000 plus 110,000. We are going to get 310,000. Okay. Then now we add our payments. So we are going to say 115,000 plus 35,000 plus 13,500 plus 8,500. We are going to get 172,000. Then now let us add April. 123,000 plus 35,000 plus 13,500 plus 12,250 plus 4,900 plus 95,000. We are going to get 283,650. 283,650. Let me just cross check this one. 123,000 plus 35,000 plus 13,500 plus 12,250 plus 4,900 plus 95,000. 283,650. Okay, so we are going to have surplus or deficit. Deficit will be in brackets. Okay, so what does that mean? What does this mean? This means that surplus, when it comes to surplus, it means that cash receipts will be bigger than cash payments. When it comes to deficit, when it comes to deficit, it means that payment will be bigger than receipts. So now let us see the first one. 310,000 subtract 172,000. Okay, this one is a surplus because our receipts are bigger than our payments, 138,000. Then the next one, let us see, 210,500 subtract 283,650. Our payments are bigger than our receipts, so this one is a deficit, 73,150. 73,150. Okay, let me just cross check. 210,500 subtract 283,650. 73,150. Okay, then we add opening cash balance. Opening cash balance. In March we don't have opening cash balance. The business is starting to trade in March, right? Okay, so now we have closing cash balance. We have closing cash balance. We have closing cash balance. So our closing cash balance, all right, closing cash balance, we are going to add 138,000 and a zero, so this is going to give us 138,000. So if we close March with 138,000, it means that we are going to start April with 138,000. Okay, so if we start April with 138,000, then we generate a deficit of 73,150. What does this mean? 138,000. It means that we are going to close April with 64,850. Thank you. This is how we do our cash budget, and this is Mr. TK Classes. Thank you. We meet in the next lecture.